We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. This is a pre-recording of a Twitter Spaces live event that we hosted last week. If you'd like to be a part of the next one, go on to Twitter/Palisades Radio, and you can be part of the conversation. You can listen to our conversation on the desktop, but it works better on the mobile app because then you can actually log in and ask us questions and interact with us as well. Just as a reminder, as always, you can find our podcast on Spotify, Apple Podcasts, and anywhere you want to listen to it, as well as Odysee if you don't enjoy using YouTube. I hope you enjoy it and hope to see you on the next one.
So, Tom, were there any other questions from any other listeners that you wanted to entertain?
Well, Nate has had his hand up for quite a long time, and I've been trying to find a good spot for him. So, Nate, go ahead if you still want to ask a question.
Hi, guys. I just wanted to clear up a couple of things concerning Bitcoin. I know it's been a while since he covered that subject, but that's when I got up on stage. I just like to push back on the time, the lifespan of some of the miners. Those numbers are artificially skewed by failed generations of miners. And we saw considerable drop off. The S9 itself is lasting 5 to 6 years now, and that number is only increasing over time as we improve methods of cooling, such as immersion. This also impacts newer technology and newer miners. Their lifespan is going to be far greater than a lot of the experiments that we went through on our journey with Bitcoin. Secondly, the energy that Bitcoin uses is often wasted or trapped. There's over 20 million wellheads that are capped in the U.S. that we should either tap into for oil itself or use the wasted gas, either if it's flare off, which will reduce the hydrocarbon use or hydrocarbon burn off by 43%. And if it's simply wasted, Bitcoin has the option to move there in a container, no problem. Doesn't necessarily need to be stuck to the grid. That's why the miners that moved out of China found homes across the globe. Last thing is, even on the grid, it acts as a subsidy. At low cost, when nobody's using the excess energy that is required for base load, Bitcoin offers a subsidy to the network, which can help the energy company build out more technology like they should have done in the past. We hope they use this funding going forward. And I mean, it's no surprise to the gold community, the silver, the precious metals community, or the Bitcoin community that we're concerned about the fluctuations in the paper markets. I mean, I think we're both on the same side there. And I own gold, I own silver, I also own brass. And that's what will be the most precious resource if we happen to not be able to communicate with each other and have an energy scarcity issue. So I hope that's not too off topic.
That's a good point, Nate. And again, coming back to the idea of having multiple asset classes, I think is important, and not being, let's say, religious about any particular one.
Yeah, Nate, if I may, I understand that, and I've seen more that happen in Texas, especially a lot of these shale gas wells are just venting gas, right? So it's a waste. So yeah, it makes sense on the short term. So instead of wasting that gas, you can attach a Bitcoin or a series of Bitcoin miners. That makes sense to me. That's not stupid at all. The issue I have is we need to understand the global supply chain is very complex and interconnected. And the Bitcoin miner has a lot of semiconductors in it. And to continue, and let's just take it a step further. I'm also very concerned about the digital banking system, because no one really goes to the bank anymore. They just do it online, or they use their phone. They just zap on their phone. They get to a store. You just put your phone and you buy your coffee, whatever it is. Everything is so simple now. that is maintained by a massive amount of energy burned every minute to allow that to function. And that's going to continue to function for a little while, but that's going to get more problematic. And not only will it get more problematic, but the ability to produce semiconductors to advance a Bitcoin miner is going to become more problematic. And so I'm not saying it's going to happen tomorrow. I've always said Bitcoin is a great speculation on the short term. And my short term is 1 to 3 years, could be a little bit longer. But the mid to long term, I would not want to be holding Bitcoin. I'm not saying you can't own Bitcoin, but I'm saying as energy gets much more problematic, it's going to be much more problematic to deal in a very complex, high-tech currency. And it's just...
If I may. The Congress passed 2 bills concerning semiconductor manufacturing in America. We're seeing the FSMC plant in Arizona. Intel itself is pushing well over $200 billion in investment in the United States, and their current chipset is set to double in efficiency with this next generation coming out. Some of your concerns are valid. I certainly agree. But we're also talking about chips that are used in everyday products such as lamps, kitchen appliances, TVs, refrigerators. The number of chips in a car increases by an order of magnitude with each generation that comes out, and they're only planning on increasing that. I saw a dog crash airbag in the new latest Ford releases on their website the other day, and it looks more like a trebuchet, in my opinion. And it's nonsensical when you get down to it. I agree, but we're not slowing down. And we talk about the capture of energy and the preservation of value within that, and that is exactly what Bitcoin is. And we may disagree on some things, but we can certainly see the debasement of our time and money through the government overspending. I mean, I wish they could balance a budget and stick to it, but we both know that's not going to happen anytime soon. And as far as the banking industry, Bitcoin uses a fraction. So,
okay, one last thing. Even though we are building, like in Chandler, Arizona, we're building new semiconductor fabs. That's the head of the snake. That semiconductor fab, even though we've got it opened, we've hired the employees, we've got the equipment, we've got the energy, we're going to start ramping up these semiconductors. After a while, you've got to maintain the equipment. You need more parts. You need neon to etch. You need all these things that come from a 2,500 mile, 5,000 mile supply chain. So you can't. All I'm trying to get is people to realize a new fab plant, which is the head of the snake, and you've got a 5,000 mile long supply chain all over the world. You need the body of that snake to supply all the materials, components, and parts to continue making that semiconductor possible. That's, for some reason, we tend to believe in the Star Trek replicator. New fab plant, it's going to pump out these new semiconductors. It's going to continue to do that. But no, it's not a Star Trek replicator. The only way it can pump out those semiconductors on a consistent, ongoing basis, if it continues to be supplied by a 5,000 mile long supply chain. Now, 2,500 miles is how long a semiconductor will travel, but the 5,000 miles is across the world, where all the different materials, components, parts, all these things have to come to that plant to make it possible. That's what the world is forgetting. So I think that's an important part of the dynamic that is overlooked. Again, that won't happen right after the plant is open, but as time goes on, to continue manufacturing those semiconductors is going to become problematic.
So, Steve, let me ask you a question. Do you see the world becoming more simplified? I mean, we've gone through this massive first wave or first digital technology bonanza over the last 10 years?
It's going to become more simple because Joseph Taylor said it, the collapse of complex society. And if we think we're going to make something more efficient just by adding more technology and making it more efficient, it isn't. You know why? A semiconductor is not more efficient because what we want to do is to remove the 3 or 4 decades of all the time binding when Texas Instrument or other companies started making semiconductors. All the people that went to school to learn how to do software engineering and semiconductor manufacturing, we have been all the 40 years of building this technology. We just want to erase it all and say, okay, today it's very efficient because this little semiconductor today can do all this work, all these millions of transistors. No. Because you want to erase all that massive energy that was used to build it where it is today, so it's not more efficient. It's a massive consumer and will continue to be a massive consumer of energy. It's not more efficient, it's less efficient. And so the reason why you have the collapse to more simplicity is because the energy isn't there to continue the complexity. You can't get some idiot like, oh, we're gonna go to 10.0. Well, I'm sorry, you don't have the energy to go to 10.0. You're going to go from 8.0, you're going to go back down to 6.0 you're going to actually crash because the Roman Empire fell apart pretty quickly. And so it's funny when the serfs that took over a lot of the area around the ancient Roman Empire, you had the feudalist estates and castles. The serfs came across these aqueducts and they had no idea what they were. They had no idea what these ruined aqueducts were. So you see, that's what happens. You lose the technology, it collapses. You lose the education, the 40 years it took us to really advance semiconductors in a relatively short period of time, because I can assure you, Taiwan Semiconductor is not sharing with anybody else their intellectual property. When they go down, it goes down with them. And this is the same thing that's happened over and over in civilization. When it collapses, the complexity collapses, and then we become simple because we know how to grow food, we know how to kill animals, we know how to catch fish. That's easy. We can do that. We don't need a lot of complex systems to do that. And unfortunately, that's more where we're headed. Again, it's not going to happen overnight. It's going to take, I think, by 2030, the world's going to be a much different place. And by 2040, it's not going to be recognizable.
I can certainly agree on the change in the future. And as far as the supply chain is concerned, China does control 45% of the global important mineral resources. And I think we definitely need to change that as far as America's deals and relationships throughout the world and bringing some of that to us. But we have ESG concerns and we have all those lovely things that the Chinese necessarily don't care about. I do have a little bit more hopeful outlook on the future. But I thank you for this conversation and entertaining me. I hope you guys have a good day.
Thanks, Nate. And when we think about, let's say, essential or rare earth alloys, I believe that we need to make electric motors, permanent magnets. Like to your point, China controls actually a greater number. I think it's above 90% of rare earth metals like that. So, there's so many pieces of this supply chain that something as simple as a boat getting stuck in the Suez Canal can just totally get disrupted by, right?
Yeah, and Tom, I know we're almost on 3 hours, right? But we need to understand this. Let's forget about advancing technology. Let's forget about how much more we can make it more complex, and let's focus on maintaining all this infrastructure crap that we have. According to the American Society of Engineers, we need to spend $2 trillion on the U.S. grid just to get it back up to snuff. and we want to go to EVs. According to the data, this was as of 2017, and it's been 5 years. The transmission lines have a 50-year life expectancy, and then you got to replace them. As of 2017, they were 28 years old on average. So now they're 33, 34 years. Some are older, some are younger. The transformers that do a lot of the work, their life expectancy after 40 years, they really start to fall apart. A lot of maintenance. Well, we're at 40 years on a lot of the transformers. And so forget about trying to become more complex. A lot of the unfortunate, a lot of high-tech guys think we're going to the cartoon Jetsons. Elon Musk, you got to love him. We're going to, he's flying up in space and we're going to have, flying cars. No. We're going to have difficulty just maintaining all this crap that we've built up. Because back in the 20s, there wasn't much there. After World War II, the United States started to really build up, the highways and interstates, and then the suburban, the suburbs and all the stores and all the telephone lines and transmission lines and the water systems. All this stuff is aging, and you got to replace it or maintain it. We're not going to have the energy just to do that. And then if you look at China, now China may have a little advantage because their infrastructure is relatively new, but we're starting to hear a lot of that infrastructure is already falling apart. Bridges are collapsing because they did it cheaply. And a lot of the stuff that we're buying from China is inexpensive. The quality really isn't there. I don't blame the Chinese, but this is their way of trying to maintain the system in their communistic economy. So, I saw this one Chinese contractor was building a road, and it was only an inch worth of concrete. It was all, they put a bunch of crap in there to make it. So a lot of that's been done. So that infrastructure is probably not going to last that long as our infrastructure. So these are the issues we need to understand. We're not going to be able to maintain all this stuff that we have, much less try to advance it, because the more stuff we have, the more we have to maintain. And now with energy going down in production, it's a double-edged sword. So forget trying to go more complex. We're not going to be able to maintain what we have.
Steve, it's funny that you mentioned that we're almost at 3 hours. I think the first two that Bob and I did ended up at just about 6 hours each.
Oh, so, no kidding. Well,
yeah.
I'm not for stopping. I just, I couldn't believe, I came in a little bit later, but I couldn't believe 3 hours have gone by. I hope I haven't bored the hell out of anybody, but I think this is very important information. Yeah. And, to kind of put all what we're talking about into perspective, unfortunately, the IEA and the Energy EIA, which is the U.S. Energy Information Agency, a lot of their forecasts for oil production growth are more political in nature than they are in a realistic assessment of where we're going to get there. Because a big segment of it is unfound, undiscovered reserves. And even though there's some out there, we're not really finding them. And I mean, we're burning 4 barrels of oil to every 1 barrel of conventional oil we find. And so this is the dynamic we're facing. And so what is happening is I find it so fascinating how the financial analysts, CNBC, the politicians, maybe some know it, but it's amazing what the forecast is for the future, especially with a lot of the high-tech guys. A lot of these 30-year-old guys that came out of college, they started up a tech company, and they made a lot of money. They're living life large, and they just think we're going to continue on that perspective. And unfortunately, maybe I'm wrong, but just looking at the energy data, I see we're facing a collapse. And so And the market hasn't figured that out yet. And when they figure that out, that's when we're going to see some interesting fireworks. Politically, we're going to see shutdowns of resources, especially by countries that need them. And that hasn't happened yet. And that's coming.
Do you tend to see capital controls, monetary controls? Because obviously, if you're right with the ETFs and so forth, and a movement back into commodities, governments are going to be kind of at a loss for tax revenue. I mean, this has a domino effect.
Well, it does. And what has been the tax revenue has been people are making more money now, so they're paying more taxes. The capital gains has gone up on stocks because stock prices up until recently have gone to the moon. And then real estate prices, people are probably paying more taxes now as they revalue real estate taxes, because real estate values, what happens when that goes the other way? You're right. It's a disaster. So the pension plans implode, the 401ks implode, and this doesn't even include the institutions, right? These are just regular old people who are expecting to get a check. They're not going to get that check. Or they're going to say, well, Mr. Smith, you're going to get, you're only going to get 70% of that check. You see, this is coming.
I would mention too that at some point this passive investing crowd, or the idea of BlackRock or Vanguard being sort of the perfect scenario, people may just start taking money out and buying, if it's physical metal or just go into cash or whatever it may be, they may just start pulling out, and then those institutions aren't as relevant as they used to be.
You're right. Unfortunately, I think most Americans don't think that way. You and I do, because we're precious metal investors, and we have a certain mindset. But when I come across people, their eyes glaze over when I talk about, you're one of those people. Now they may get, I call it the, come again to precious metal religion, come to Jesus moment. They may get that with the precious metals. Some will, but people tend to be followers. So they may be happy that their institutional investor says, well, we're moving into silver. Okay, well, okay, so I'm not quite sure. I think you're right. We're going to see more people pull out and move into metals, but I also think institutions are going to do it too. And so either way we get there, it's going to be the same thing. It's going to be a wake up call, because you can't protect. And you know what you're protecting? You're protecting energy value. Why? Because energy is the economy. Someone says, well, Steve, I produce genes. Well, you don't produce genes. You produce energy in a form of a gene, because all the labor, all the materials, the transportation of those materials, the capital expenditure to make the gene plant took a bunch of energy to manufacture or to construct that gene plant. And then all the people working as labor, the electricity that comes in there that runs the sewing machines, it's all energy. So even though that gene ends up on a retail store at $30 for the jeans, that is energy right there. And I wish instead of putting $30 on the price tag, they would put barrel of oil equivalent what it cost to produce that gene. Because people would get it. They would get, okay, that gene cost that much energy, labor, human labor equivalent of oil. So when the energy production falls, guess what? You can make less genes now. You can't make more genes. You can, you can make less genes in relative speaking. And so, this is important, increasing of energy as well as the higher energy return on investment has allowed the world to do what? Economies of scale. We have been able to do, we can make 1 million widgets much cheaper than 10,000 widgets. But that was due to oil and the global supply chain. As we go down in energy production, the economies of scale goes in the opposite direction, because it becomes impossible now to produce those 1 million widgets because you don't have all the parts. So let's say you want to start doing more simple things, widgets on a local basis, the cost is going to go up. Forget inflation. The economies of scale are going to go in the opposite direction. And that is another factor that proves to what you were saying, that we're just not prepared for this.
Yeah, it's one of the reasons why I've been trying to get people in the industry to look at, on the metal side, some sort of more national type of exchange, or some type of, to get the public more involved on the usage of, for example, silver as money. I know we're going to sound like most people's grandpas here, but at some point, if the world becomes simpler, and it's much cheaper just to hand over a silver quarter or a silver ounce to somebody to do a day's labor or a job or something like that, there has to be a structure involved for the merchant to take that coin or ounce or whatever it may be, and then convert it to some type of spendable currency to pay their bills. And that's why it would make a lot of sense, because we're all sitting on junk silver, 90% pre-64 stuff, and we're thinking to ourselves, we're ready for the Armageddon. But it's like half these coins, you can't even read the face of the coin. I mean, we're expecting this 19-year-old clerk at the local grocery store to be able to accept this, and they don't even know what the hell it is. That's what I'm trying to help, or at least try to get maybe more structure throughout this country, where you have more of a footprint that you can actually have. We're not relying on digital currency or paper money, whatever it may be, because this energy cliff is going to create this inflationary nightmare that if you've lost your purchasing power, if oil goes through the roof relative to silver, let alone what's it going to do your purchasing power in paper.
Well, Bob, you brought up a good point, and there's two ways to look at this. And there's one factor that I would say 99.9% of the precious metal community misses. I've done a study, and it's based upon scientific numerology numbers, quantifying the amount of silver coins that were lost from the 1800s to like the 1950s. We're talking 1 billion ounces of coins were lost. Silver coins, gone, just gone. And we look back in history, the estimates are the silver and the gold in the late Bronze Age, by the time the Roman Empire happened, they know that the coinage in the Roman Empire was not from the coins melted from the late Bronze Age, because those were mostly lost. And then the coins today are not made from Roman coins, because they know the kind of quality or where the metal was mined. Most of that silver and gold from the Roman Empire is gone. It's lost. So the problem with using gold and silver coins is that this is true. We lose $65 million worth of coins a year in the United States. We just throw it out. Pennies, quarters, people just throw it out. It's gone. That's the estimate. It's not that they're hoarding it. Some of it's being held, in seat, in cushions in your couch, or, falling down some places, cracks, but a lot of it's just thrown away. So the problem with using silver and gold as coinage, not only the denomination value of it, is the loss value of it. The losses, the annual losses of people just losing the coins. So it may be better to have the silver or gold held somewhere where, people or institutions are doing audits. I'm not saying it's a guarantee, right? This is, in the past, a lot of gold was held, but then the gold producers back in the Middle Ages, they were actually inflating the number of gold certificates out there, or gold money, than the real gold that was held. That can happen. Mm-hmm. But I think the issue is using coins in circulation. We know it with the clad junk or the clad metallic coins. They just disappear. So it's probably not a good idea to do that even though that will happen, people are going to trade silver and gold. They're going to do that for goods and services. I see that happening. But if we're going to try to do something that's more structured, it's probably wise to keep that metal safe in a vault and just have it backed by some kind of monetary value. That would be the wisest thing.
Yeah, and that makes a lot of sense on the government level. But the private programs out there, which I applaud them, but the issue you run into is they'll buy 1,000-ounce silver bar, and you have silver to the nearest gram or silver to the nearest ounce, and it's really just a balance sheet type of. It's not like the person can ever take delivery of that if they ever distrusted that program. For example, let's just say they just wanted to have the metal in hand. There's ways to do that actually create. It's like the old old West banks, where you find a nugget and take it to your bank, and they give you a line of credit, and you can spend against that metal. But you can. The ability would be is if you could actually take delivery of that metal, whatever is remaining, or buy back whatever to make it a full ounce, whatever it may be. That's what I would like to see is some type of segregated program where you deposit your junk silver, for example, like you said, and you start spending away, but you still have a pile of coins left if you haven't spent it all. Versus a digital program where you buy a portion of a bar, and then if you wanted to redeem, you're just going to basically redeem back in either in tokens or some type of paper money, that type of thing.
Can I ask a question, guys?
Yeah.
I was wondering for both of you, Bob and Steve, what's your thoughts on the above ground supply of silver and gold? Because I've seen a lot of conflicting information. Some people, I know gold, the estimate is 2,000 tons, but silver, I've seen anything between 1.8 million to 500,000. So if you put all together investment products and silverware, all that stuff, I know Steve has a lot of thoughts on that too. He thinks it's overestimated. And just another thing, underground at the Earth's crust, what's the ratio between silver and gold? Is it still 19-1? Do you guys have any thoughts on that? Thank you.
The best information we have to go by estimates, because people think, well, there's all this silver that was produced in the Roman Empire that we're just forgetting about. No, it's been lost. Some people, there's some of it. It's a fraction of what was created. And even if we go on in time, in the Middle Ages, a lot of that metal is gone. And even the metal that was produced from the mining industry, when the United States was the biggest silver producer in the world, when we moved out west in Colorado and Utah, and we were producing more silver than Mexico in the 1800s, late 1800s. A lot of that's gone because it went into coins, and then Americans just lost it. We just lost it. And so now the number is about 55 billion ounces of silver that has been produced since man started producing silver, and about 5 billion ounces of gold. That it's about 10, 11 to 1. Interestingly, most of the silver is gone. It's been industrial demand. And right now, if you turn on a switch in your house, there's some silver in that switch, in your light switch. There's some silver in it. So people say, well, we'll just get all that industrial silver and we'll recycle it. Wait, then there's all this infrastructure that's got silver in it that we're using. And then what's been thrown out is in the waste in dumps and landfills. It's not going to be recycled, even though some silver industrial is recycled. So the number I see in investment demand, in investment gold, is about 2.5 billion ounces. That's central bank, and that's private. And then there's probably 1 billion of ounces of gold. This is gold I'm talking, in jewelry and artifacts. And the rest of it is lost. Silver is different because there's probably, at best count, maybe 5 billion, 6 billion ounces of investment silver. We don't know, but that's about what we know, that either it's held in the LBMA, COMEX, and then there's been about 2.5 billion ounces of silver that has been purchased in the last 20 years by investors. Most of that is still there, Some of it may be lost, but people have got it in their safe in their home. And then who
Do you know
knows
how
what
much that is in tons?
Let's see. Let me do my math.
My math's horrible.
Yeah, here, let me just do that real quick. Okay. So if we're talking 5 billion ounces, 5 billion
Because the number I've seen is
divided
1.8 million tons of silver. That's what some estimates are, which you think is way overstated, right?
Well, it's actually 155,000 tons. Because 5 billion ounces of silver is 155,000 tons of
So there's
silver.
less silver than gold. Is that
Well,
only investment products or?
Well, I think there's about 5 billion ounces. Well, let me tell you, what is reported is about the same as gold. The reported gold is about 2.5 billion. Reported silver is about 2.5 billion. But what is privately held and then what may be held by China or Russia, it could be upwards of 5 or 6 billion. And that's it. So really, it's only I call it about twice the amount of investment gold is held, about the same as silver. So it's 2 to 1. Now, there could be, jewelry. If let's say silver goes to 100, someone who has silver jewelry would say, okay, it's worth to go down and get it sold and I can get $100. But jewelry is not really recycled. It's thrown out as well because a ring is worth about $20. It's not, an ounce of silver for a ring that's pretty heavy. It's about $20. So no one, if it's an ounce of gold, they're going to go down and get it, recycled at the pawn shop for $1,800. I'm not going to waste $20 to drive down to the pawn shop to pawn $21 worth of silver. So what do Americans do? They buy silverware or they buy silver jewelry and they just throw it out. So even though analysts are saying there's all this silver out there, there's silver jewelry, there's silverware, there's industrial silver, most of it's gone. And even if we get some moving into as recycle, it could be 1 or 2 billion ounces. It's not going to be that much. It really won't.
That makes sense. And in the Earth's crust, I believe it's 19-to-1 ratio, silver to gold, if I'm not mistaken.
Well, it might be, but we're mining it at about 8 to 1.
And that's usually byproduct, right? Silver comes byproduct with other metals.
Yeah, well, if we look at total silver is about 800 million, and total gold is about 110 million. So it's about 8 to 1. We're producing, either byproduct or gold or silver primary mining, or it's about 830 million ounces, and gold is 110. But primary is about 90% of gold production. 10% comes from copper and other.
That makes sense.
When the energy cliff starts to go down, it's the base metal mining that's going to be impacted the most. And that's where 55% of silver comes from. Zinc, lead, and copper. So there's so many bullish reasons to own silver, even though I continue to see people on social media, oh my God, silver, I've owned it for 10 years and it hasn't gone anywhere. I get it. I get it. And so that's why you believe in manipulation, because someone's keeping silver down, but it's the best kept secret. And let me tell you, if we didn't have trouble with energy coming, I may not be a big supporter of silver. I'm very big. I am the biggest believer in silver, even more than gold, due to the energy dynamics that are facing us. Not due to central banks manipulating or printing money, but the energy issues that we're facing. That's the reason. And so if you're frustrated with the silver price, I'm not frustrated because I know where we're headed. And so I don't look at the silver price falling from 26, 27 down to 21. Oh my God, just lost $6. I look at it as, look at all this unfortunate, ignorant people in the world that have no idea what a value the price is. And if more precious metal people understood the energy, they would continue to buy more and they wouldn't be as frustrated.
Steve, I think that was is a really good point about not being frustrated by the price of silver. I mean, it's funny. I've gotten, just in the last week alone, several emails from people that are very frustrated with the performance of the metals. And I try to offer some perspective by saying, if you look at the Dow or the NASDAQ and you were invested in either of those, relative performance wise, the metals have done fairly well. But in your opinion, maybe just reiterate why you think that at the end of the day, you feel comfortable by being in the metals.
Tom, I think that's one of the best questions to ask, because years ago, I was more part of the precious metal community thinking. It's those bullion banks out there shorting the metal and taking the metal down. And what we don't realize, what a lot of people don't realize, is when someone is going to make a bar of silver, and I personally know companies that make silver bars, if they're going to buy 3-4 tons of silver shot or whatever to make their bars, that day they're going to go short silver. That's just the way the market works. So to say it's those nasty bankers that are shorting silver, well, part of it's that, but it's the system. That's how the system is designed. And the cost to produce silver is now $20. If the cost to produce silver was $40, and even though it's primary silver, about 30% comes from primary miners. Without that 30%, it would really impact the supply and demand fundamentals. So the market actually goes more. That's what the market designs the price right now. Unfortunately, that's the way it is. They haven't woke up to energy. So they look at, okay, it costs $20 to produce silver. Right now, due to the dynamics, it's the price is 22. If the cost was 40 and the price was 22, then then the market would be screaming bloody murder because it's below the cost of production. Gold, right now with $100 oil, I looked at Barrick and Newmont. It's $1,500 now. All in costs, not all in sustainable. All costs. It's $1,500. So the price of gold is $1,830, $1,840. But they're making good profit. So the manipulation is more of funneling investors into stocks, bonds, and real estate than into the metals. That's the manipulation. Just like a chiropractor manipulates your body. But unfortunately, Americans and people throughout the world thought they were in the right investments, and they were, but now that's going to change. So I do get the frustration, but the reason why they're frustrated is because a lot of the precious metal community continues to focus on the banksters, the smashing, the paper money silver, the derivatives. I get all that, but that's not the reason to own silver. Why? Because if the central banks and the bullion banks have been manipulating silver, well, what would keep them from doing it forever? So why the hell would you invest in silver if it's being manipulated forever? So it's not a good reason to be in the metals because of manipulation. So that if you listen to analysis about the manipulation and all this, that's no longer necessary. It's actually old news. The reason you should be investing in the metals is due to the energy dynamics. And that has been the case for 2,000 plus years. The energy store of value was the same in the late Bronze Age, the same in the ancient Roman Empire, through the medieval empire, up until recently. It's always been energy was the driving force of the economy, and the metals were the store of energy value. It's always been that way until we tapped into oil, and it changed the whole dynamic. Then we started using dollars, and it became more efficient to use dollars. I'm not saying there wasn't inflation, there was, but it was more efficient to use dollars than to use a gold coin. And that worked for 100 years, but now the energy dynamic is changing that because the world has added so much paper asset values and currency values and bonds and treasuries, we don't have the energy to pay all them back. It's a Ponzi scheme. So you do not want to be in a Ponzi scheme. And Ponzi schemes can continue if you increase energy production. They get into trouble because that's what happened with Bernie Madoff. Bernie Madoff was able to pull off his Ponzi scheme because the stock market kept going up. As soon as it went down, it's like the tsunami came in and then went out and it showed you the destruction. Well, when energy production falls, it's going to be like the tsunami going out. It's going to reveal the disaster that is all these overinflated supposed paper assets. And I call the energy cliff, it's going to turn assets into liabilities. And actually, they've always been liabilities, but the noun that we have given them are assets, and they really aren't assets. They're energy IOUs. And this kind of methodology is not taught in business college. It's not taught in economics 101 because the economists don't even consider energy. They think energy is a different sector of the market, like the housing market, the retail market, the technological market, the manufacturing, the automobile industry. If you don't have the energy sector, you don't have any of those other sectors. And so it's not a sector, it's the foundation of our economy. And so that's why the metals have been and continue to be a store of energy value. And unfortunately, 99% of the market doesn't know it yet.
So, Steve, do you see a difference, let's say, in your portfolio between gold and silver, or do you see them as one in the same, and just one is maybe provides a little bit more potential volatility or beta than the other?
Well, because the reason the price of gold right now is 84 times more than silver, well, because if you take 1,500 and divide it by 20, I used to have the number. I'm going to do that right now. 1,500 divided by 20, 75 to 1. Well, look at that. That's the gold-silver ratio because that's what it costs to produce it. That's how the algorithms are set up. And so what I see happening is if I have a lot of money, and it's probably wise to buy gold because there's just less storage of it. But because there's so much industrial consumption of silver, more institutions and investors are going to move into silver or hedge funds because of the percentage gain. So as the percentage gain goes up, because right now there's about 5 or 6 billion ounces of maybe silver investment to get there, it's 2 to 1 to gold. So the gold-silver ratio will fall as more people move into silver. The price goes up. The relationship falls. So you don't have to lug around 75, 80 ounces of silver. You may lug around 40, 30, 20, 10. And logically, that's how I see it playing out as the world wakes up. And so to me, I look at silver more as a percentage gain due to there's just not that much of it compared to gold. If there was 10 times more silver, then I say, well, it could get to, 40 to 1, 30 to 1. But because there's only 2 times more silver, that's a whole different dynamic. And that hasn't been factored into the equation.
Yeah, that's really well put, Steve. I know we kind of touched on this earlier, but maybe it'd be good to do it overtly. Jaggerpaws was asking if you see nuclear taking over and providing us with some energy. And if I remember right, it's just the fact that we don't have the energy in the first place available to be able to build those plants and bring that energy production to market in enough capacity before we get to the energy cliff. Is that right?
Yes, and let me preface this. I was very fortunate to meet Don Arabian back about 20 years ago. I went through a change in my life. I said, this isn't working. And so I kind of gave up what I was doing and I reassessed. And I lived in Cocoa Beach, Florida. And I came across this guy named Don Arabian. Well, I found out that he was one of the 4 men who put man on the moon. Now, for those who believe that was all a conspiracy, they had ham radio operators that were receiving the messages coming from the command module even before NASA did. So we did land on the moon. But what he told me, we sat down, I spoke with him for the first time on his second balcony floor. He was retired from NASA. Actually, he was working with the Chinese because the space shuttle program was a disaster. We were supposed to launch that it was supposed to be like an airplane. We were supposed to launch that every week. 52 space shuttle launches once a week, to bring all these satellites up into the atmosphere. It was a disaster. So he helped the Chinese build rockets to put up their own satellites. Well, he told me, he said, Steve, we have the power of the sun as a nuclear reactor, and we are stupid enough to put that in our backyard. So it takes a massive amount of capital and technology to make sure that sun doesn't cause radiation to kill a lot of people, which we saw at Fukushima and Chernobyl. And that's just 2. So if we consider that problem, that innate problem, it's very expensive to do nuclear power correctly. So if you do it correctly, the funny thing is, back in the 50s and early 60s, the Nuclear Regulatory Commission and nuclear industry said nuclear is going to be too cheap to meter. Well, it didn't, because no one ever considers the full cycle energy return on investment, because you have to decommission that bastard. And we really haven't decommissioned a large nuclear power plant correctly yet. And we're starting to. And so the problem comes down to the nuclear power plant components. Again, if we had Captain Kirk with large Star Trek replicators to make all the nuclear power parts, components, and to manufacture those, and then to put them on a nuclear power facility somewhere, then nuclear could work a little bit. But it's done the old-fashioned way. You have to extract the metals to make the nuclear power plant components. And a lot of these components come from the global supply chain. It's not some supplier 10 miles down the road. You got suppliers in Germany, you got suppliers in India, you got suppliers in Asia, you got suppliers in Australia to make the nuclear power plant. So when the global supply chain starts to break down, you cannot get the components, the high-tech components, to make a nuclear power plant, because we stopped doing that. And I looked at Caterpillar because I wanted to know what it took for Caterpillar to make that 797F 400-ton massive haul truck that the mining industry uses. Well, Caterpillar has this wonderful supply chain. They'll tell you about it if you go on their website. Well, a lot of that stuff is made in the United States, but a lot of it's made elsewhere. So you can't make that 797F Caterpillar tractor or haul truck unless you have all these components, especially the high-tech components that come from all these different countries. And then that component that was made in Indonesia, it just wasn't just made in Indonesia. That component that Caterpillar needs was made from its own supply chain of 10 and 20 different countries. So it's like a mosaic disaster that has been functioning. So I think, to answer your question, this is kind of what we're facing with nuclear or thorium. We can't go. and the salt thorium reactors, they still haven't got the technology down. It's just too complex. And then even if they did, we still got to mine the uranium. And lastly, and the most important thing, the global supply chain, the bloodstream is liquid fuel. It's not electricity. Electricity is the manufacturing, or the lights and the heat for people to live. The global supply chain of goods and services is transported by liquid fuel, and you cannot transition it to electricity, even if you wanted to, because the grid is falling apart. We're starting to peak in oil production, and when you have less oil production, you have less diesel, which means you can extract less coal and less natural gas. So it becomes a compounding problem. And so if you did want to go to nuclear, even though I wouldn't agree with it because it's too problematic, you should have done that 30, 40 years ago. We've run out the clock.
I think that's an interesting point too, because when we think about the development curve of nuclear and where we should be versus where we actually are, we should be on, version 20 or 30, and this technology should be far more advanced than it is. Instead, we had some very unfortunate accidents, but that has really set nuclear power back, I think, decades because of, the public's perception towards it.
This is funny. I don't mean to interject. The insanity. John Deere is coming out with an electric tractor. And so they've got this massive tractor that actually they designed in Germany. It weighs 17,500 tons, 17,000 pounds, 8.5 tons. The battery is 12,000 pounds. And so the problem is that's a medium-sized tractor. The big tractors that we use, they've got the 8 wheels, right? They're double wheels. These things are massive. They're the 8,000 series tractors. They estimate the battery size would have to be 100,000 pounds to do 12 hours worth of work, because it's no use to put a small battery in a massive tractor and you get about an hour out of it, because that tractor's got to go 12, 14, 24 hours. So you know what they're doing now? They make this little autonomous tractor. That's the new design. And they got a mile-long extension cord. That's how they're going now. I swear to God. And now they've got another system. They call it the electric tractor swarm, because a lot of the farm is done with several tractors, several combines. So now they've got this five autonomous tractors. And guess what? Each one is cabled to each other. So there's like an arm that goes up, and each one is attached, and it's a little bit further down the row. And then behind it is the separate big tractor that's got 3,000 meters of cable on it. That's almost 2 miles. So this is John Deere. This is their solution to going green. You're going to have 2 miles of cable running up and down it's a disaster.
Yeah. And then you think about how many, like you said, thousands of pounds worth of metals are in the batteries in those things. And then the cable to get it out to the field, like it doesn't make sense. And then when you think about the efficiency of the spatial efficiency of fossil fuels versus batteries, that's a massive, massive difference, right, Steve?
Yeah, that's the issue with batteries. Batteries can't store the power. Not really. And then the cost is way too high. And that, even Elon Musk's truck, they did a comparison with a Ford F-150 and then pulling, a moderate sized trailer, not that heavy, up a hill. And then they took Elon Musk's truck. I think this was, what's his name? Oh gosh, you've interviewed him. I can't think of his name now, but he did the study, and it shows that the Musk's truck cannot make it up on one charge up the mountain with the trailer. It doesn't have the energy, stored energy. And so this is the problem. Not only will we not have the available lithium and cobalt and all the materials it would take to make the batteries, they just don't do the same thing stored fossil fuels do. They can't. And so it's not a solution. It's just more, crazy. I find it interesting that they think, and you know what's funny? There's a 1929 patent that John Deere did that's got a little tractor that's got a little motor, and there's a balloon that's got a wire holding the balloon is keeping the wire up, and then it goes to the electric lines or the telephone pole electric lines. That was their patent back in 1929. And do you know why they didn't do it? Because we had plenty of fuel, plenty of petroleum. Well, now they're coming back to do that because they want to go green, or and so it's not going to work either way, because it's just not efficient enough. I can't imagine a farmer trying to run 5 autonomous tractors, all attached by cables, with another unit that's got 3,000 meters of cable, and that not getting all caught up, because that all has to be done by software. So if the software goes down and the farmer has got to plant his field, he's got to harvest, and the software guys say, I'm sorry, or we're down, we'll be up in 2 days. I need to harvest the food now. He can't run those autonomous tractors on his own. He needs the software. So you're setting up for a disaster doing that.
Well, if my phone can't make it through a Spaces call, then I don't know how an electric tractor is going to make it through a whole field.
I agree. And I don't think my laptop is going to make it much longer. So if for whatever reason I'm gone, unfortunately, that might have to be the end. But we can do this again in the future, because I think more people are going to be waking up to the energy predicament. See, people say, Steve, what's the solution? There isn't a solution to a predicament. There never is. And so that's what we're facing. We're facing an energy predicament, not an energy problem. The predicament is we have to live on less, and there's no real good way of doing that. And the way mankind is, we're not going to do it in a very managed and positive way. It's going to be wars. It's going to be conflict. They're going to shut down. That's what's going to happen. And it's, unfortunately, you add the food problems that are coming. This is very, very problematic times that we're facing.
Yeah, not only the food problems from, a lack of energy, but supply chain breakdown, and conflict-wise, how, just exports of wheat from the Ukraine and Russia this year, that is going to dramatically affect food supplies.
Yes, and what we do in the United States, as well as we produce food organically. Some of it was well done organic, and some of it was sloppy, and there was disease, because you just can't throw uncomposted feces on crops and think you're going to get explosion and growth. You're going to have problems, and so it was done for thousands of years the organic way. But the problem is we couldn't do it organically, so that's when the Germans came up with NPK, nitrogen, phosphorus, and potassium, and so now and then there's other methods, but basically we get our food by pouring petroleum and natural gas, figuratively and literally, into the soils in the United States and everywhere. And that's how we get our food. So if oil production falls, then food production falls. So that goes hand in hand. And we really can't transition to organic to really feed 7 billion. Possibly we could if we went really smart, like Cuba did after they lost their fuel from Russia. But it's going to be a collapse, because we're not going to be able to maintain the ability to feed 7+ billion people.
David, did you have something to add there?
Very briefly, Steve, thanks for coming on board. I didn't get to listen to the whole thing. Just going back very recently, what Bob and I think Steve were saying about, silver could go lower, but it's going to hang around the cost of production. I agree with that. It's my 2 cents is there's a book, I still have it. It's been out of publication for decades called You Can't Lose Trading Commodities. And the whole premise of that book is whether it's a wheat or silver or cornmeal, if you can buy the commodity and average in below the cost of production and don't over leverage, you can't lose. So I just wanted to reaffirm what these gentlemen said. Steve, thanks a lot for coming on board. I think it's a side that the market needs to hear. And I know you're doing more and more all the time, but being on this Spaces call, I think is going to help a lot of people. Thank you.
Yeah, David, thanks. You're right. We had the pandemic shutdown and silver reached a low of $11. I use technical analysis as a guide, but that's just short term because the fundamentals are really going to kick in. But to me now, the real ultimate low could be an intraday or intra-week when we start to see a real big correction in the markets, possibly 16, 17. That would be the ultimate low. It wouldn't get down to 11 because now the cost of production is at 20. But for that to happen, the price of oil would really have to fall. It'd have to fall to 50 or lower. The same thing would happen with the precious metals in 2008 when gold was 1,200, silver was 20, and then they both fell because oil was 145 and it fell down to 30. So if we do see oil fall $30, $40, $50 and the markets really fall, we shouldn't be concerned to see possibly 16, 17. But that to me would be the low. And if that happens, good luck trying to get any silver bullion. But David is correct. Right now, the cost now to produce silver is about $20, and that's based on Q4 when the price of oil was $70. So these are the dynamics, and I can imagine very savvy traders understand this. So that's why, and if you look at the COT report, the commercial net short position, the last one, silver, the commercial net short position, I say it's about 1/3 of the high. Gold is closer to 2/3. So that's why I've said I think silver is going to bottom sooner than gold because gold has a much bigger buffer. But I'm not saying gold is going to go down to 15 or 1600. But if it does, I think it's got more room to fall due to its cost of production than silver. I think silver will bottom quicker, and I think the metals are going to bottom sooner than the stock market, just like they did in 2008 when both gold and silver bottomed in October. The markets didn't bottom until May, April the following year, and the metals were going up. I see that happening, and it may be we may see even a larger increase in the metals.
Because of that rotation of capital out of the bonds and real estate market, as you were saying earlier?
Tom, it may be a combination of things. I think some people may be concerned about bonds. I think we could have more problems with geopolitics with Russia and then with China, with Taiwan. So when we get to sell off this time, instead of going into bonds, I think institutions and investors will move into bonds, especially with the stock market selling off. But I think a percentage of those are going to move into the precious metals. And there's a guy, a person, I think it's a gentleman. He's called the Crypto Whale. He's got a half a million followers. He thinks Bitcoin's going to go to 10,000. And I think it could. And if that happens, I'm not saying it will, but if that happens, then those people are probably going to move into precious metals, because when Bitcoin was 65,000, all the crypto people were saying, the gold and silver, it's gone nowhere. Look at, well, that's turned around now because it's lost more than half of its value. And if it's going to 10,000, then I think a percentage of that money will also go into the metals.
I was talking to somebody the other day. I can't remember who right now, but they were saying that this destruction in the crypto markets, it's possible that there is that amount of capital is just basically gone, and it won't be in there, or it won't be available to be able to rotate back into the metals.
Well, if we believe in the idea that you need a new sucker to push the price higher, unfortunately, and I don't mean to get down on Bitcoin, there's a lot of other cryptos, but the institutions were starting to move in because Michael Saylor of MicroStrategy decided to turn his high-tech company into a Bitcoin acquisition firm because it really wasn't making a lot of money, whatever he was doing. And so now he decided, well, I'm a very, very big Bitcoin guy. So they started loading up on Bitcoin. And let me tell you, last year, he bought a lot of Bitcoin. I think the average was $51,000. And so now, according to his Q1 2022 report, his average break even is 30,400. But I can assure you the $2 billion that he borrowed to buy those Bitcoin were not at 30,400. It was at 50 or 48 or 52,000. So if it starts to fall, especially it seems to be tracking the NASDAQ. If it starts to track the NASDAQ and the NASDAQ continues to sell off, it gets down to 20, then MicroStrategy and Michael Saylor, I think he's going to get into serious trouble. And then, yes, there's a lot of issues with the Luna and the Tethers. I think there's a whole dynamic underneath there that's just fraudulent, unfortunately. And so if that really collapses, I think you're going to lose a lot of faith in people getting back into crypto.
Yeah, that's fair. 1001, do you have some color to add there?
Yeah, I just want to add maybe a comment, not a question. But if you read Larry Fink's annual letter last year, they were saying, the buck is going towards ESG and they won't, carbon credits will not be applicable anymore. And all these miners, they're being kicked out, like from China, like Steve was saying earlier, in Kazakhstan, if I'm not mistaken, and they want to use hydro electricity and nuclear. But if you bear in mind that with energy cliff, going to start rationing energy, then it will go by priority, right? Logically, in theory. So people don't like these miners.
Yeah, and I think where we're at now, we're at about 98 million barrels a day of supply. And demand has been a little bit higher than that because the central banks have been flooding the money, they've been backstopping the system. So there's more demand. Well, it's been drawing down inventories. Well, what happens when that 98, maybe we get to 100? Who knows? It could go a little higher. But what happens when it starts to go down to 95, 92? You see, then you have less coal production. Electricity supplies are also going to decline. And it's coming. And so let me tell you, I don't care who you are, but if you are a politician, you're going to care about the companies that that support you, the manufacturers, the industry, or your constituents that want to make sure that they can cool their home and heat their home during the winter. They could give a rat's ass about Bitcoin because Bitcoin is similar to the precious metals. Most of the public could give a rat's ass about it. And so when push comes to shove, energy production becomes problematic. I think we're going to see more countries and more states start to curtail Bitcoin mining production. They're going to shut it off. So that's coming. I'm not saying it's coming this year or next year, but that is coming. So I just see more negative reasons to own Bitcoin than positive ones. But you never know if it goes back up again. It's a speculation, but I'd rather go back to the keep it simple, stupid principle of the precious metals being the 2,000 plus year store of energy value. And it's just, a coin in your pocket. You go to a grocer or someone and they have gasoline, things get rough. You can give them that silver coin. It's hard to do that when the grid is down and you can't transfer your Bitcoin. I'm not saying it won't, it'll stop completely, but it'll just become more problematic in the future.
Mm-hmm. Yeah, and I think to your earlier point, Steve, I believe the margin call point for MicroStrategy is around $22,000, and I think if that happens, it's going to be even more of a watershed moment, waterfall moment, whatever you want to call it. That's also going to be accompanied by a big drop in attitude and confidence in Bitcoin. And as much as I believe in the decentralized nature of it and the finite nature, and all of the ideas that Bitcoin and crypto stands for, when you're able to trade it at 100 times leverage, that programs like that, I think there needs to be, in some ways, unfortunately, a day of reckoning, and a lot of that stuff to get washed out of the market before we can look at Bitcoin. Or everybody looks at Bitcoin and cryptos as two very separate things, right? But if we look at them as a store of value, I think we need to be able to have a lot of that stuff washed out.
I do not want to come across as a crypto basher or a Bitcoin basher.
Me neither.
I am not. I look at it logically. If you're going to walk in, you're 250 pounds, you eat McDonald's all day, you smoke and you drink. Logically, I'm going to tell you, you keep doing that, you're not going to last long. So if I look at Bitcoin, they say it's decentralized. It's not. You need a highly complex global supply chain to allow a Bitcoin miner and system to function. So it's not decentralized. What is decentralized? This silver coin in my pocket. I can walk down the store and I can trade that in. And it's decentralized. And gold and silver have been decentralized for thousands of years. And so, again, if we had an endless supply of energy, there was no resources, restrictions, then, Bitcoin and cryptos they would probably be a very good alternative. Because as I mentioned, we lose gold and silver coins. We use the crappy base metal clad coins. We lose 65 million a year. So it's not really smart, logical to be trading silver and gold coins. So something that's backed, that's held somewhere, and you use paper money. Paper money is a good way to do it if it's backed. Digital is more complicated because, as I said, digital banking servers are replaced every 4 or 5 years. And we have been doing that. But what happens when you can't replace that digital banking server? Forget the Bitcoin miner. Well, it's going to be hard to do digital banking. And so, and looking at the structure of the system, it can unravel quickly. And so that's why I always go back to saying, don't try to complicate it. Keep it simple, stupid, in gold and silver, because they have proved themselves for 2,000 years plus. Bitcoin has been it's a blip in the entire 2,000 plus year history.
Crypto Bunker, you want to add some color there?
Yeah. So just because I'm a Crypto Bunker doesn't mean that I disagree. I do agree with you. I'm actually not a Bitcoin guy. I do think that the energy is a big issue. So I've been saying that for probably over a year at this point, that other cryptos are potentially less energy intensive. I know Ethereum is going through the merge, which is going to be basically proof of stake. So maybe look into that. But yeah, it's going to be like 99% less energy used. And I think it's actually could be useful for precious metals, because if you can see each ounce of silver backed on the blockchain, then there might be less potential manipulation. with some of these futures. I know David Morgan's involved with a project that's sort of doing that, but you do need smart contract platforms to make that a reality. But yeah, again, I'm not really a supporter of Bitcoin. But yeah, some of these smart contract platforms are proof of stake, so they're not really energy intensive, and they're sort of more useful than Bitcoin, I think. So.
No, I understand what you're saying, and it does make sense. Going to proof of stake instead of mining them, it takes a lot of energy. It takes a lot of energy to mine Ethereum, as you know. But that's just part of the issue. The other part of the issue is, and this is going to take time to happen. It's not going to happen overnight. But the problem is trying to maintain a very highly complex internet global system. It's going to be very hard to do that because it takes a massive amount of energy to maintain that. And so as we start to fall down in energy production, it's going to be hard to continue replacing and maintaining this stuff. And so what makes sense to me is the world is going to start moving back to more simple. And this may happen very quickly. And so, again, I make that example. Romans, they were supplying million plus people with water. I mean, it took 1,500 years, 1,400 years, 1,300 years, again, before centralized water was a thing. And the Romans were doing it. They had these massive aqueducts. Well, when the Roman economy collapsed, 400 AD plus or minus, 100 years later, 200 years, the aqueducts were falling apart. They were using the materials, the stones, for other purposes. People just didn't know what the hell they were. And look at the Mayans. The reason we had no idea the Mayan culture was there because it was covered by forest. The difference in the Mediterranean with the ancient Greek and the late Bronze Age, because the Mediterranean is very arid. So the forest, when they disappeared on these islands, along with the civilizations, they never really, a lot of them didn't recover because of the arid nature of that environment and the destruction of the topsoil. So we could see what happened in ancient Greece. You could see these ruined empires of these buildings, but the Mayans were all covered with forest. And so the collapse can happen very quickly in a relative speaking of time. And I think that collapse, I'm not talking 100%, but I could see a 50 to 60 to 75% collapse of global economy within 20, 25 years. And that's very quick in a relative period of time.
Yeah, I agree. I actually, I wasn't even, my original question was actually about real estate. So I wanted to ask you about that as well, if I can.
Sure.
But I do think that, I'm very bullish on gold. I actually flipped Ethereum into gold back in January, luckily. But I did want to ask, I bought a house like a year and a half ago, and it's up like 50%, which is crazy. It's almost like a crypto chart. And I'm thinking of selling it, and I do want to, potentially buy gold with the proceeds, or at least some of it. So I think that's a good trade right now. And I guess, I do want to move out to more of a rural area for like farming purposes, growing your own food, things like that. But in between, I kind of want to see that play out potentially. So I'm thinking, oh, maybe I could rent somewhere. But because of the chaos that is potentially coming, it's kind of hard to not have a property in that scenario as well. So it's sort of a tough pickle a little bit with that. But I guess I'm just wondering what you thought of that trade and sort of that mentality.
Okay, and let me start by saying, of course, I'm not a financial advisor, so I can't give out advice. Right. I have to say that, but here, I agree with your thinking. And I also want people to understand this transition isn't going to happen overnight. Now, I'm not saying shutdowns like we had during the pandemic shutdown, or governments shutting down economies for whatever reason, like they're doing in China. You see, that will make the situation worse because they're actually physically shutting down the system. And we know in the United States, people who lived in San Francisco or in LA, in New York, they shut down the city. Well, you were SOL. So, people started to move out of the big city. But now things are reopening, people kind of forget. And so they're going back to their old ways, but the energy cliff really hasn't hit yet. Wait till it hits. And so the thing is, I do see where real estate prices are going to fall. We're going to have a glut of homes. Matter of fact, the glut is just going to get worse. There's going to be homes that are going to be, they're going to fall apart, especially in the big suburbs, because they're just not going to function well in a falling energy environment. And so you can't repair them. You can't, the economy in that area is going to suffer. So and then infrastructure is going to suffer, and even the services by police and fire, that's all going to suffer. And so that's why it's better to be out away. But the timing of that is difficult because it's hard to find a new home now. Because in the United States, especially because everyone's holding on to their home. But there's still about 10% of the homes are vacant. So when we start to see a decline in home prices and new home sales, because they're still way too high, then energy production starts to decline, then we're going to see this feedback loop start to hit, and more houses are going to become vacant. The price is going to fall more. And so, but it is a timing issue. But I do agree with your overall assessment that it's a good idea to get out of a home when it's high and to gold. And it's a good idea to find something that's more in the country. But I still believe people have time to do that. You don't need to do that tomorrow.
Interestingly, Steve, as you're mentioning that that kind of trade for home into gold, I sold my house. I believe it was in 2014, where I live in Alberta, and I came across a chart a couple of years later, completely unrelated and unknowingly, that compared home values in Canada with gold. And if you looked at the time, that would have been actually a perfect time to go from selling a house at the peak of the market, because it never really went anywhere after that for quite a while until about the last year and a half. And if you had traded that into gold, it was actually a really, a perfect time to be able to do it. But I think those charts like that are interesting to look at and get some perspective in, figuring out, let's say, average house price versus ounces of gold, not necessarily always comparing everything back to dollars, right?
No, you're right. And I haven't really done that metric, but I think it's a good metric. And it seems like existing home sales are based on what a new home cost. And depending on homes in how area, the demand for it, if it's high demand to live in this area, it's got a high appeal to live here, and there's just not enough homes, so the price can go up higher. But it seems to be based on new home construction. The problem is there's this idea that's been put forth that there's a shortage of homes. There isn't. The market has been screwed up. It's abnormal. People are not listing their homes because there aren't homes to buy. And so the prices are going up because investors are now buying a lot of homes, and even institutions are buying homes. And to me, I'm thinking, what are you thinking? Because a suburban home, that's a McMansion, that's 3,000 square feet. That's got 4 bedrooms and 3 baths. And it's 2 stories. That thing consumes a massive amount of energy to heat, to cool, and maintain. And also, you got, there's two people living in it. Maybe you got a family and they got 2 or 3 cars and they got to be driving everywhere to go to work and school. And so when energy falls, that dynamic of that suburban real estate gets into serious trouble. And so why on earth are people buying these for investment properties is because their timeline and their understanding of the market is superficial. They're not looking at it over a mid to long term. If you're buying a home to sell it in a year or two or to make a profit, fine. But if you're investing in properties because you think it's going to be the thing, there's not going to be the energy to support all this real estate. And so that's a dynamic that is, unfortunately, I wish I could do more analysis on it, but the basic rule of thumb is big city, big suburbs are going to get into big trouble. Rural country living is the place to be.
We had another question come in. How long does the oil industry have to start seeing the decline for the shortages be materialized in our daily lives?
Well, I think they are already, and part of the issue has been switching out coal for green energy. That has made the situation worse. And it started in Europe before the Russian-Ukraine war. The Russian-Ukraine war it's kind of like when some people go into a home to renovate it. They go, oh, this is going to cost $20,000. Then you start uncovering there's rot, there's mold. It's $40,000, $50,000, $60,000. The green energy and the Russian-Ukraine war revealed the energy cliff to the world sooner than maybe it would have a few years later. And so now, with the world needing to burn so much oil, natural gas a year, when you go down just a little bit, that's when you have the volatile high prices. And when you can't increase production enough, you start drawing inventories. And we're already drawing inventories. Now, in Europe, the inventories reached a low, and now they're going back up, even though there's this war with Russia. And now the U.S. is going to send $40 billion of aid there, and NATO is going to continue to assist Ukraine, which I think is not a good idea. It's going to make the situation worse, not only for the Ukrainians, but also for Europeans and the rest of the world. Well, the natural gas is still being exported from Russia to Europe because their inventories would not be increasing. And I think it's 20 companies or 20 countries have already decided to go to Gazprom. They're going to trade in rubles. So, they realize that if Europe wants to go into a severe depression, they have to buy natural gas from Russia and even oil and petroleum. If they don't do that, they're going to go into depression. So they're doing it. And so I think as time goes on, when U.S. shale starts to decline, oil in the next year, when natural gas shale production starts to decline by 2023, 2024, and other countries who are also declining, and then you add in all the geopolitics and all that, then we start dropping in production, and then we have less goods and services in the world. And then the 80 million supposed cars that are going to be produced this year, well, maybe in 2, 3, 4 years, it's going to be 75, 70. And that's the way we're headed. We're not going to go back up. We're never going to go back up to 97 million cars. That's gone. We're probably going to be, I'd say by 2030, we'll be lucky to see 50 million cars produced, maybe 40. And that's where we're headed. And people think we have a shortage of cars. There's going to be too many cars, as well as going to be too many homes. Because people, due to the economy slowing down, are going to move into each other. They're going to share cars, and they're going to share homes. And so that's a dynamic that the Wall Street has not figured into the economics of the GDP and the market.
Kind of to your point there, Steve, I remember during or closer to the beginning of the conflict, somebody had tweeted out, if they don't start paying for gas in rubles, Europe is going to meet their net zero targets much sooner than anticipated.
Yes. I mean, Germany gets 40% of its natural gas from Russia. Italy, I think it's 45%. And so now you got Mario Draghi. He's going to Egypt and these different countries, and he's begging and pleading for natural gas. Well, Egypt was supposed to be producing a lot more natural gas than they are, but they're not. They are, but guess what? They're consuming most of the increase, so they don't have a lot to export. And so this is the problem we're at now. The U.S. is producing a lot more natural gas, but we're consuming a lot more because we've got rid of coal. And so is Europe, Germany. And we went with wind and solar. And they work fine when wind's blowing and the sun's shining, but when they stop, and that's what's going to happen this summer in Texas and in the Midwest. When it gets really hot, the wind stops blowing. And when the wind stops blowing, the wind power that can be more than 50% of Texas's power production, it could go down to 5%. Then what do? You got to bring on natural gas because wind just failed. And so you can do that if you have natural gas production. What happens when natural gas production declines and wind fails? You're not going to be able to offset that wind. And so we went from a very stable nuclear, or coal nuclear. That was our stable base load power. For coal was for 100 plus years. Then nuclear came on. And nuclear is stable, even though it's very problematic. It's not really safe if you look at it entirely, but it's stable. So we took off coal, which is stable, and we've added natural gas, which I call it just in time. Because coal, it used to be 3 months, 90 days of coal supply at every coal plant. And I imagine it was in the United States, and it was even more. Some had 110 days worth of coal, and in Europe was the same way. Well, now we've got 30 days worth of natural gas. So you've got a third of the supply. It's just in time. And that is only works if the natural gas shale wells continue to pump out that gas. And so we went from a very stable power to a just-in-time natural gas. And to make it even worse, we added wind and solar, which is very volatile. And so we went from stable to hyper unstable. And this is another factor that's going to drive energy prices higher too.
So Steve, once we start hitting this energy cliff and maybe attitudes start to change and there becomes more appetite for whatever type of energy that we can get, no matter what, do you see us being able to, or do you see societies going back on and producing coal again and burning that for energy, and how long do you think, how much coal is there left for us to be able to actually create energy with?
Well, there's still a lot of coal, especially like in Australia, the United States. But the way China is producing and consuming their coal, 8 times the rate the US, they're blowing through their reserves. But we also have to go back, because people tell me, Steve, I get this a lot. Stop worrying. When oil gets into trouble, we'll go to coal. We go to coal to liquids, like the Germans did in World War II. Do you know that the waste product to go from taking coal to make synthetic diesel? You've got massive heaps of this crap of coal byproduct to make that diesel. And the energy return on investment is too low, even if you could do it. But we get back to the simple problem. It's the petroleum diesel that allows us to extract coal at an elevated rate. So when oil production falls, diesel production, refining, is going to fall, which means you can produce less coal. So you say, well, we're going to do a Manhattan project and we're going to go coal to liquids, let's say in China. I mean, just to replace 1 million barrels a day of diesel, I can't imagine how much coal that would take. It would be astronomical just to do that. So were you going to use the diesel that you made from the coal to extract more coal? So I think these are the complicated issues that the market isn't factoring in. You can't really go to coal and increase coal production because you're not going to have the diesel to do it. And so I always say energy is a driver of the economy. The number one energy source is oil. Oil allows coal, natural gas, nuclear, hydro, wind, and solar, and geothermal. You can't do any of those now without oil. Back in the day, you could do that with coal when you transported it by wagon. But now it's all transported by rail, barge, ship, and truck. And those are all powered by diesel. And so these are the dynamics that we need to understand. When oil falls, all the other energy sources are going to start to fall.
That kind of goes back to that idea that we were talking about earlier with the tractors with the mile-long extension cord, right?
Yeah, I mean, I can see why Germany would do that, right? They would get them off of Russian diesel. Makes perfect sense. And maybe it's a little more difficult. We've got a mile-long extension cord. So if you're the John Deere manufacturer, you're happy because you get some farmer to buy it. Well, he's got to deal with the issues that come with trying to make 5 tractors all connected with cables and then another big system that's got 2 miles of cable on it. Because I've seen how the engineers make a turn. You've got the first autonomous tractor turning. Well, the other one's got to turn in unison or they're all going to bunch up. And then you've got this other tractor behind it that's got 3,000 meters of cable. And it's got a robot arm that retracts and expands the cable as it's needed in this farm. Now, that could work, right? That could work if you don't have diesel, you go electric. Well, the tires that tractor is diesel, made from oil. It's still powered by electricity, which is, it's powered by natural gas and coal and renewables now. So even though you're not using diesel, you still have to make it up with power that's coming from the grid. Some farms may have more local power. That's great. Maybe they can last 20 years on their wind power and their solar. Great. But it can't be done on a massive scale. It won't work massively. It could be done on a local basis.
Steve, if we separate out the uses for hydrocarbons, how much goes into, let's say, making materials, making tires, making plastic, versus how much do we burn for energy? And when I say energy, I mean power generation, diesel fuel, gasoline, that separating those two out.
That's a good question. And you think I'd have the answer. I do kind of know what natural gas, oil, I would say the petroleum products, it's probably 50 to 60% is transportation and the rest is done with products. Now, I know this would, and I'm just kind of throwing that out. I'm not quite sure, but that's what my gut tells me. Natural gas in the United States, of the 65 billion cubic feet a day of demand, 31 billion cubic feet a day is electricity production. And that's as of now. That goes up in the summer and in the winter. So it's about half. But during the winter and summer, it could be 70%. And so that's why you have a drawdown in inventories, because we just don't have enough natural gas to do it all. And so that's the issue. And so not only do you get less, so it's a double whammy, right? Not only do you get less transportation, you also get less products that are made by petroleum, and everything is plastic and toothbrushes and paint and tires. There's thousands of components and products that are made by petroleum. And so it's not only the transportation of the product, it's also the manufacture of the product that's going to be, so it's a double-edged sword.
Yeah, and the reason I bring that up is because it seems so short-sighted to say we need to get rid of all oil production and, ban pipelines and all this stuff. it doesn't make sense when we're not only using it to get around and also ship everything, but in the production of 99% of everything we use for every day, right?
Yeah, it's years ago it was much different. Before petroleum was used in products, things were much more simple in the 30s and 40s, and then we started advancing technology and synthetics and carpet and all this stuff, which probably isn't good for us, but we have them all over the place, all made with petroleum, and now we're going to start hitting what I call the demand destruction, the supply and demand destruction, because people say, well, the demand is still going to be there. Well, I can sit in my home and demand all the home I want, all the cars and all the computers I want, but the reality is, what is the supply going to be? So it doesn't matter what demand is. Demand is always going to be there. It's what the supply is. So we're heading into the supply crunch, and the supply crunch is going to force the demand crunch, because you can't, everybody can dream of what they want, and the demand is always there, right? Who doesn't want to go out to eat at a better restaurant? Who doesn't want a better car? Nobody. Very few people live a Gandhi life. Everyone wants better. So the demand's always going to be there. It's the supply. And right now, we're starting to hit that problem of supply. And so really, the supply of oil and the demand has been about the same. But now we're starting to realize that, and let me tell you, if this Russian-Ukraine war escalates and Russia says, well, listen, you're going to continue to send howitzers and tanks and train Ukrainians, fine. Well, now we're going to make we're going to declare a war, and it's no longer a special military operation, and people can debate about the adjectives all they want. But if Russia decides they're going to declare war, well, then the U.S. and NATO is going to get more involved. That's going to make a bad situation much worse for the global economy. And then you've got the curveball called China and Taiwan. And so now we see the U.S. Navy is starting to amass around Taiwan. I mean, if God had to look down and see, geez, how stupid can you be? Right now, the politicians have got to be the most stupid they've ever been. And I'm not just talking about the U.S., Russian, and all these different, it's everybody. They're just as stupid as ever. And they're getting stupider. And so if we continue down the stupid path, it's going to impact every citizen in the world. And it's just going to speed up this global energy cliff and supply crunch.
And why do you say it's going to speed it up? Is it possible that, again, that theme of deglobalization is what speeds that up, Steve?
No, I think, you see, when they shut down when you shut down an oil well, it does not come back the way it was. Some do, some come back 90%, and some don't come back at all. So when they shut down the oil in a lot of these wells, it changes the dynamic. So you don't come back to where you were, especially in the shale. We were at 8.5. Now we're about 7. We can't get back up to that 8.5. And you think it'd be easy, but that's a decline rate, and that's also it's very difficult. And so when you add that up, and then when you add the debt, see, we've added all the debt to make the energy cliff. We brought on future production. We increased the amount to 100 million barrels a day. Let's say if we didn't use debt, it would have been 75 million barrels a day. Well, we increased it to 100. And we're trying to maintain 100. So we've actually built up a global economy and supply chain that needs to function at 100 when really it could have been only 75 without the debt. So now if the debt implodes, which it will, then the supply is going to start to implode. And that's another factor that isn't considered, because someone's debt is another person's asset. And so this is the issue of the energy cliff that starts to work out. That's why it's cliff-like. Because when the debt starts to fall apart, then the entire system starts to unravel. Pension plans unravel. That means John Doe that gets $2,000 a month from his pension plan, that debt imploded, his pension plan just evaporated. He can't, $2,000, he can't purchase things. Well, that $2,000 was used to continue the energy production. And so when the debt starts to implode and the assets start to implode, so will the energy production. And that's part of the dynamic that is really misunderstood, and it's hard to quantify. But that is why we're going to see that more cliff-like decline than a slow, gradual collapse.
Looney Report, did you have a question for Steve?
Not so much a question, more of a comment to add to what he just mentioned about all the plastic that was consumed and what needs to occur from that. Just thinking of the building code has increased over time and now relies so much more on plastic in many ways with PVC requirements and just furnace that needs to be cannot be a lower tier efficiency and so forth, which rely so much on semiconductors and other components. I can just see a case where just building a house won't be possible because the building code will prevent, because you won't have the supply for it, as silly as it sounds. And the same factor of the semiconductor, having battery operated tools, you have a limited size, like all the Milwaukees and so forth. All the battery operated have a limited number of charge, and you need to replace that. Well, you'll be stuck with, a tool without a battery at some point in time because you won't be able to replace it. So just food for thought here that I wanted to provide.
No, you brought up an excellent point. We have added, we went from, who wants to walk around with a 50-foot extension cord with a drill, especially if you're a contractor? That's why I laugh at John Deere going to a mile-long extension cord. Well, are you kidding? So it was a solution to go with electric battery for contractors because it was easier. I get that. But we've built up, we're going to all this electric, and at some point in time in the future, you're not going to be able to replace those batteries. So a lot of this stuff isn't going to work. That is so true. Another thing you brought up about, will you be able to build the typical house today due to the problems getting these components? You won't be able to. And so that's why I see, as the energy cliff starts to work, we start seeing production decline. The centralized governments are going to they're going to cease to function. Because centralized governments functioned and grew due to the energy. They're going to collapse and become less productive due to the falling energy. So we're going to go back to more decentralized, small, local, and regional governments. And so at some point in time, there isn't going to be a building inspector. You're going to have problems with firemen, then you're not going to have the money to pay firemen. So fires are going to happen more in these big cities, especially if people start doing more arson because they're pissed off, they lost their job. So it becomes like a recipe for disaster. It's like a positive feedback loop that is negative, really. And so I think in time, it's going to be where people, like you see in third world countries, they've got a car that's like a 1970, 80 car. It's got a different door color, a different wood. The hood is a different color because this is how these poor people are trying to function in a third world country because the energy was siphoned to United States and Europe and Asia. But certain regions like South America, Central America, Africa, they didn't get the energy. So if you want to blame the bankers for manipulating the market, you can thank the bankers for funneling the energy in our favor because we've had a nice standard of living where a lot of people have not. So they had to make do with piecing together. Well, guess what? We're going to start piecing together stuff as best as we can. And unfortunately, a lot of the 1970s and 80 cars were easy to piece together, but a lot of these EVs and a lot of this new high-tech stuff, it's not going to be easy to piece together to get the components for. So if I think it's good to be looking into country and in rural properties, those who start buying these older cars, or companies who start thinking, well, if I can't get the semiconductors to make these digital, electric cars today, or digital cars that have all these semiconductors in them, let's make them more simple. I think that's what's going to happen. You've got to go more simple to survive. And either we do it, we manage it, or it's going to be done ad hoc. And it seems like it's going to be done more ad hoc.
Bob, how about you? Do you have anything else you wanted to touch on?
Sorry about that. I'm still trying to take my last Prozac from what Steve just gave us. My God, I thought I was bearish, and this is like the coming apocalypse, in kindergarten version. No, I think there's a lot of great stuff he mentioned. It's one of the reasons to give people a little bit of an inference of why I did what I did 15 years ago was you have to have control of your assets. You have to try to reduce your risk, your counterparty risk. You have to plan for, if your insurance policy is gold and silver, you have to treat that insurance policy. That has to be held with the most risk-free, whether it's stored at your house or with a professional manner. It has to be taken to the utmost care because, I think this energy situation, it's real, and you never know what geopolitical event could come out that could just take this thing to a different direction. It's one of those things that you can try to buy ETFs and all these structured programs for convenience sake, but if we do have a situation where the dollar starts to eventually lose value because the debt situation becomes unbearable, then you need to have access without anybody's liability. I mean, it's critical. So, and then the idea also of trying to store your stuff, in 15 different countries and try to reduce risk and spread the nest egg out a little bit. I think this kind of emphasizes the real impact that energy can have when everyone's trying to do the right thing, or maybe try to put it in all these different places. But in reality, sometimes the best place is within arm's length. So it definitely makes you think about strategy and so forth.
Hey, Bob, thank you. And I'm sorry, I got knocked off again. And I'm telling you, my brand new laptop, it's funny because you would think a laptop would be able to handle Twitter Spaces better than an iPhone, but it doesn't. So I don't know how much longer. Unfortunately, I can't go to my desktop, but it's really hot. So this is going to be my concluding remark. I agree with Bob. The best thing to be in with the energy cliff coming is to be in a sound store of energy value. Precious metals don't store energy. They store energy value because energy is the number one driver of the economy. Stocks, bonds, and real estate don't do that. They're energy IOUs. So with that said, it's important that people start transitioning as best they can. This is not a solution for 7 billion people. I wish it was. But if people start looking at what they need to do, they need to get into sound store of energy values. The best ones are gold and silver, physical. And they need to start looking at what they can do for their local or regional area. Take control more of their own energy source, more of their own food production, and to try to live more simply, because it's going to be forced on you. Either you do it manually or it's forced on you and you're not prepared. And I think that's the best thing we can do. This is not going to happen overnight, but we're seeing the symptoms already, and they're just going to get worse as time goes on. So I do want to thank you, and we definitely have to do this again in the future as we see more of the data and dynamics of the energy cliff show reveal itself.
I appreciate it, Steve. Thank you very much. You're an encyclopedia, I'll tell you.
Well, I actually, I love what I do. And thank God I've got subscribers who support me, because I get up in the morning and I try to go to the sources. I try to, I'm not that smart of a person, but the one thing I've figured out to do is who to listen to and who to ignore. And unfortunately, most people do not understand who to ignore. They're listening to the wrong people. So if you can understand what people to listen to or follow, or what information. So I go to a lot of the energy sources. I go right to the data, because the data doesn't lie. People do, but the data doesn't lie. And the energy return on investment doesn't lie about the peak oil, because even though we brought on a lot of this oil production in the last 15 years, it just allowed us to continue to go to Walt Disney World, Starbucks, and Walmart for another 15 years. And it's going to actually make the situation much worse as we go over the energy cliff. So I want people to start looking at the system with energy as the focus, because I keep saying this: don't use energy for 24 hours and tell me how far you got. If you drive to work, you can't drive to work. If you get to work and you work at a manufacturing plant, well, you can't do anything because you're using power in your position in a manufacturing plant. Or if you're an analyst like I am, I'm using a lot of energy on my computer. And so, and then we have to feed ourselves. That takes a lot of energy. It's just amazing. We tend to ignore. I believe the world believes in the Amazon Star Trek replicator economy, that you buy something and a day later it's on your front door. And that just takes a lot of energy that we're going to get into trouble doing. And so if people understand energy, they'll understand what they need to do in the future.
Well, I think a lot of recency bias has to play in that as well, Steve, because if you have every one of your needs met all the time, and you're spending your time focused on other things, why would you worry about all of these issues that we've talked about for the last almost 5 hours here?
Yeah, and that's because we've added more production. You see, that's the thing. But we had the 2008 financial crisis, and I mentioned that car production collapsed, but it hit a new high in 2010. Global car manufacturing hit a new high. Well, it was 97 million units in 2019. It fell to 80. It fell to 78. It went up to 80. We were supposed to hit 83, 84 this year. And now they're saying we're barely going to get 80 and a half. We're probably going to be below that. So that just goes to show you this isn't the same as it was. The rubber has hit the road, and we have hit the limit now. And to try, and I call this, we are trying to run a car at 100 miles an hour. It's not designed to do that, not for a long period of time. Tires blow out, things start breaking down. You can't run it at 100 miles an hour for a long period of time. Some cars maybe, most cars not. And we are running the world at 100 million barrels of oil production, and it's impossible to keep it there. And so when it starts to fall, I mean, look at people, they can't get it's hard to get a car. Well, it's kind of hard right now because we've lost 17 million car production in a year than we had a few years ago. So it's harder to get a car. But that will get worse. But then when the energy cliff really hits, the debt starts to implode, then there's going to be too many cars. Then people won't be able to afford them. We won't have the energy to run them all. And then there are going to be too many homes. There's going to be glut. There could be suburbs that have, 50 or 100 homes. Maybe there'll be 5 or 10 people living in those homes, 5 or 10 homes, 10%. That's what we're headed to. Not tomorrow, but over the next 3, 5, 10 years. And it will get worse, especially after 2030. And so these are things we have to kind of train ourselves to look at and understand.
I think it's also important to talk. I mentioned it earlier on a tweet, but crime is going to eventually rise as well as the economy starts to collapse. It's a natural evolution, and that's something that I think a lot of people aren't prepared for as well.
No, because I'm thankful, even though the printing of money has not been good, we're printing money, debasing currencies. Well, it has allowed governments, because governments aren't all bad. It's nice to have running water. It's nice to have firemen and policemen, even though there are problems with them at times, especially the police and security. There's problems with it, but they keep us relatively safe. When that collapses, then you're going to get, then there's no security. The security is going to, become problematic of the suburbs and of the public. So what's going to happen? People are going to have to start doing the security themselves. And that could be a small town decides, well, we're just going to do it ourselves. We're going to make sure that nobody comes into our town that we don't know. We've, especially areas that have guns. I hate to say that, but in some of these small communities in the West, well, a lot of them are respectful for firearms. They're respectful. You have problems in the big cities, but mostly in the rural areas, people are respectful of firearms. And so that makes sense, especially when the security of the system breaks down. Then the local sheriff, even though he may not be getting a salary, people may help him, provide him with things to be the sheriff. And then people are going to volunteer to have the security. That is another aspect that will probably evolve. It's going to, instead of being centralized and managed, it's going to evolve from the community and the regional area on its own.
Just to Bob's point, when he was saying about social unrest, I was reading a book by Ray Dalio, The Principles of a New World Order, and he thinks there's going to be a civil war in the next election, and that Sri Lanka is a good example of the social unrest that's going on right now. So with the increased polarization in the U.S., it seems like it's culminating to a Mad Max type of scenario. Unfortunately, hopefully not.
Well, I wouldn't want to see that. I don't know if we'll get there, but a lot of the welfare that is being distributed to people throughout the world, whether we agree with it or not, keeps people happy, because maybe there's not enough jobs. Maybe they don't want to work. Maybe they do want to work, but they can't find a good enough job. But they're getting an income, and they're able to buy goods. And so they're content. You remove that welfare, it's no longer affordable. You're adding tens of millions of people who are unhappy now, that can't get enough food, they can't pay their electric bill. And so, yes, that is a dynamic that makes the big city, I hate to say this, a lot of people think in this new urban development where we're going to live more green. No, I see the biggest cities as the biggest problems, because it's going to be hard to manage all those people when energy and availability of goods and services are declined. You're going to have a lot of unhappy people in the big cities and suburbs, a lot of unhappy, and it's going to resort to violence and theft. And unfortunate, that's the future, unfortunately. And this has been the same thing in the past. Civilizations have gone down the same road in the past. It's nothing new.
Harry, do you have a question for Steve?
Yeah, so I kind of jumped in here a little later, but did you happen to go over have you heard of the milkshake theory with the US dollar?
I may have, but could you refresh myself?
So essentially, 2008 crash, gold and silver, and the whole housing collapse. I forget who has the theory. I can pin it to the top if you'd like, but it's like a 2-minute video. He basically explains how even as shitty as the US dollar is, people are going to be going to that for a safe haven, essentially. So basically all the other currencies are going to start losing value, and it's all going to flood into the USD until the liquidity completely dries up, essentially. And that's kind of his theory. So the crash should be much harder than 2008, and he was expecting it to happen back then. And as you can see, like the whole global economy and what's going on with, Ukraine and whatnot, you can kind of see it all playing out. Like other currencies are losing their value rapidly. And I can post on the top. Hold on. Have you heard of that?
It's Brent Johnson from Santiago Capital. And just kind of as a side note, I just did an interview yesterday with the market sniper, Francis Hunt, and we go through a lot of that same idea. So if you're looking for more data on that, we went through a lot of that. But yeah, it's Brent Johnson's theory.
Yeah. Where did you guys post that? Did you post it on your feed?
It's not posted yet. It should be probably day after tomorrow.
Oh, okay, Harry, I would agree with you. Yes, on the short term, we are seeing that, right? Look at the U.S. dollar index. But we're also now seeing the ruble go up because it's based upon now trading in rubles based on energy. The issue is the U.S. still produces a lot of energy. We still produce a lot of domestic oil and natural gas. But when that starts to decline, the debt, and you see, there's going to be we didn't even get into this, there's going to be a U.S. natural gas crisis take place in the next several years. And it may even take place sooner because we're not going to have enough natural gas to supply everything as shale production declines. And it will decline pretty fast. And so then why have the dollar? Because now Russia is proving, well, if you want the gas and you want the oil, well, you're going to pay rubles. Well, now the ruble is appreciating because of the energy that Europe and other countries need. Well, the dollar has been, Uncle Sam, because Uncle Sam carries the big stick. But if the big stick is just adding more debt, more deficits, and that's where the increase in the money supply since 2000, the increase in the M2 money supply is pretty much related to our account deficit. So the government, we added $2 trillion of debt because we added $2 trillion of debt, $2 trillion of the money supply, because that was our account deficit last year. Well, the rest of the world has been stomaching that because we're still the reserve currency. But that's because the U.S. brought on 80% of the increase in energy production in the world was the U.S. since 2008. When that no longer is true, when U.S. production starts to decline, then people are going to start waking up. the rubles seem better to me because Russia has got, another 10, 20 years of production that they can export, where the United States is just a Ponzi scheme because it's a devourer of energy that pretty soon it's going to have to start importing more energy to make up its shortfall. And that's not going to last long. And then when you add all the debt that the U.S. has, I do see the dollar getting stronger for a period of time, but that's going to stop when the world starts to understand the energy cliff dynamics and that the debts and these liabilities, which are assets today, are no longer going to be assets. The dollar is no longer going to be the reserve currency because they're going to start realizing it's the energy and commodities and the food that's which basically is oil and natural gas. That's where the money value is, and energy has always been money, always, and it still is. But we've added all this M2 money supply, all the euros and the yen and yuan. We've added all this money supply, which is much more than the energy supply. But energy has always equal money because energy is the number one factor of the economy. We just forgot about it, and we just inflated the money in the world as well as the asset values. That's why they're all going to come down. And those countries that are still exporters, net exporters of energy and commodities, will probably see in the future their currencies rise more, and as other currencies that are net importers of energy are going to see their currencies fall. Because that's just the logical outcome as time goes on.
Excellent,
Thank you.
Steve.
Thank you for that, man.
Well, Steve, I appreciate you spending 5 hours with us here. Of course, it's awesome to be able to interact with everybody and answer some questions and bounce some ideas back and forth. Well, Steve, I again want to thank you for your time and everybody for their input, and we'll have to do this again sometime.
Okay, and thank you. And if people want to understand more of the details of what's happening with energy, because that will give us a view or the viewpoint of what's going to happen, because energy is the number one driver, I provide more details for subscribers, because I think if people get the changing energy dynamics, that will make them change their minds about what they're invested in, what they believe they should be doing now, and what they should be doing in the future. Because, like you said, Americans continue to do what they're doing because we have the energy. But we look what the we've had. We're 17 million less cars, and we're just at the same production, about 98 million, only 2 million barrels a day off, and we've got 17 million less cars produced a year. What happens when that production really starts to decline? And then you start to think about all the other goods that are going to be impacted. Then people are going to see that there's the shortages. They think it's okay, it's supply chain, but it hasn't impacted them. They think it's temporary. Wait till the mindset goes off. Oh my God, this is permanent. It's just going to get worse. Then they're going to start taking the money out of the treasury, out of their money market accounts, and they're going to start putting it in something they think is going to store value. And that's when we're going to have really big inflation. So again, thank you.
That's when we kind of get that hyperinflationary behavior shift, right?
I think so, because there's so many treasuries, there's so much money supply that's held somewhere. But when the production starts to decline, goods really start to become problematic, and the people wake up that this is permanent. And then inflation goes up, they're going to start taking that money out and buying things that they could use, and that's going to really drive the inflation, regardless if the central banks do any more money printing. So yeah, that's one aspect. I haven't seen many financial analysts, even in the alternative media, look at that yet, because there's a lot there that can come out. That can come out and do serious inflation damage.
Absolutely, because again, when that time preference shifts and people start panicking and wanting goods no matter what right now, that's when those prices just go insane, right?
Right, and then goods and services may go up, but here's how I look at it. The energy cliff is going to really put inflation on things we consume, and it's going to be volatile. It's not going to go up in a straight line. It's going to come down. It's going to be volatile, but it's going to be disinflationary or deflationary for things we own. Stocks, bonds, and real estate. And even companies that have a business. Their business is going to, the value of their business and the amount of business is going to decline. So yes, things we own are going to deflate in value. Things we consume and purchase and use are going to go up in value.
Well, again, that's a pretty bleak note to end things on, but I think it's important to have some of that perspective and at least have an idea of where we might be headed, right?
Yeah, and we'll know if I'm wrong in 5 to 10 years. But I believe by 2025, we're really going to start to see a decline in production. And by 2030, the world will be a much different place. And it's peak oil, it's kind of like, when was it Galileo said that the the sun was the center of the solar system. But the church said, you got to keep it shut because it's the earth. That's the center of the solar system. That's the way religion. So a lot of people were taught thought it was wrong that the sun was the center of their solar system, and it was. So the peak oil is going to be the same thing. Many people may believe it. Many people may say, well, it's still off in the future. And some people may say, well, it's never going to happen. Well, it's the same thing with the sun being the center of the solar system compared to the earth. At some point, nobody believes the earth is the center of the solar system anymore. If you have education, nobody. In about 5-10 years, nobody, if they have education and they live in this economy, will say peak oil isn't true. They're all going to believe in it. Unfortunately, that's what's going to happen.
Well, that's it makes a lot more sense when you believe that the earth is flat, though, right?
Yeah. Well, it is if you travel a couple of miles or 100, but it's definitely round if you go out in space.
Awesome. All right, Steve. Well, I really appreciate your time. And again, if anybody is looking for more of your research, that's at srsroccoreport.com. The link is from your Twitter feed there. And I really appreciate your time here today.
Thank you, Tom. I do appreciate all of the excellent questions and listeners. I hope they gain something from it.
Absolutely. I'm sure they did. Go ahead, Bob.
Oh, I was going to say, yeah, I appreciate, Steve, too, listening to you. Just a world of knowledge. This was very worthwhile.
Well,
thanks, Bob.
It's kind of funny. Every time Steve and I have gone to do an interview, the interview is usually about an hour long, and we end up being on the phone for about 3 hours. So this is definitely a new record, right?
Yeah, and it's funny. I got back into the precious metals just like everybody else due to money printing and debt and debasement of the currency. But when I said, okay, why is gold and silver being priced this way? I realized it was the production cost. And then what's the production cost based on? It's the energy. And then I said, holy crap, energy is the number one driver of the economy. And then when I went back and found this book, The Forest Journey, that showed that the empires and civilizations in the past all rise and fell due to wood fuel and the energy return on investment of wood fuel, the light bulb went off and I said, holy crap, I get it now. It's always been the energy. Unfortunately, most people who work in the world, they assume it's always going to be there. And so that is what changed it for me. And that's why I decided to look at all these different areas. And I had to really learn everything. So now, I look at it more as, it's like, it's kind of up in my brain, but it's like, it's always been about the energy and how energy relates to everything else. And that has been the biggest journey for me. And I'm glad that other people can see it. So thank you very much. And I didn't have breakfast because I said, well, I'll have breakfast at about an hour and a half. So I'm going to go get breakfast now.
Maybe more like lunch, but yeah, I know Bob and I have been caught eating a couple times after 6-hour spaces. So
I had a 20-ounce glass of water that was gone 2 hours ago. And so I'm surprised that I'm parched now. So I'm going to get something to drink and something to eat. But guys, let's do this again because, the metals are the place to be to store wealth in the future. But then you also got to consider how you're going to live your life. And if push comes to shove and I have to bribe some border guard, I'm not going to give him my 401k that's worthless. He's going to look at me and say, hey, Bubba, take this guy out to the back. If I give him a gold coin, he'll likely let me through. And even though that is a Mad Max scenario, that's what I want people to consider. The gold and silver are going to provide you better options than most anything else. And I believe we're going to see much higher appreciation in the values above and beyond that. So I wanted to leave it at that, and I hope you all have a good day.
Thank you, Steve.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.